Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education using the TC2000 and TradingView platforms. Hello, this is the FOREX Week in Review, and I'd like to cover an important question as far as actual fading of these actual markets. The first thing that we need to look at is the dollar. And the reason why we look at the dollar first and foremost, because it is the global reserve currency. And what you see here in the commitment of traders in the overall positioning setups, we have the crowding, the percent change by the commercials, large and small speculators, the actual COT index and delta. It's based upon overall look back period. And what I see here is what I call is a trifecta of commercial positioning to the upside. Percent change, 5%, COT index, 100%, and then the delta, 3%. Significant moves to the upside, and positioning within the COT index is also, in a sense, crowded with large and small speculators below 50%. Now, it's large speculators at the extreme, but small speculators are under that 50 percentile threshold. So what we have here is kind of a T trade to the upside. And if I allow the Forex fades just to go throughout the week, what happens is when we had this major up move previously by the dollar in the previous week, as you can see, all the rest of the currencies are weak as a global reserve currency. In contrast, as soon as global reserve currency is super weak, everything else is strong, and it shows in the overall Forex pairs in terms of price. Now you can see how each of these have moved up while this one was down, and then this one moved up and down. Yes, there are some exceptions here in this case, but for the most part, the global reserve currency, as it gets stronger, everything else gets weaker. So with that general correlation, what we do is we look at the global reserve currency first, then find out where the next liquidity zone here. And I had a liquidity zone at 103.565. So I figured that if the global reserve currency hits that major liquidity zone at 103.565, that is the best place or where to get out. And I did that. And I was successful with my overall fades. All the USD pairs that were crowded to the extreme side, to the downside, I went ahead and got out once it hit the 103.565 threshold on the US dollar. Now these were positioned and they were crowded long, which meant that the large and small speculators were getting squeezed pretty tightly, but I was able to get out at the low of this particular weekly candle, which was nice. So this shows at the end of the week at $429 here for an overall short, but I was able to get out at that actual low. Same with British pound US dollar. It was all the way down to about this low here, and I was able to get a lot more than just $14 out of this overall trade, then waiting till Friday. So just want to emphasize the point here as well with the US dollar, Mexican peso. These are crowded short, which means these large and small speculators get squeezed while the price continues to go up. Now, I went ahead and got out while it was at the tippy top here. Amazing trade. I got a lot more than $446 here. But you looked at the US dollar, South African rand. I got out here at this consolidation zone area here. I didn't wait until it came back on me. Where is so important in terms of the overall place to get out or quit. And in looking at your Forex pairs in terms of the futures, look to identify major liquidity zones when you're fading these Forex pairs. So that way, once you have a target picked, in this case it was the US dollar, all four of these actual trades were out at the max profitable location. Again, it's not a matter of when and waiting from Sunday night to Friday in terms of overall profit. If I did that, I would have been out with an overall loss of $238 as opposed to an overall gain of over $4,000 based on these overall fades. Now, if I tend to look at the overall COD index in terms of the crosspair and trading those, I'm looking at an $858 profit for the week. Here, this COD index was set up for short, and then after the US dollar pair reversed, this one went up. However, in calculating this in terms of the win, it was a $543 loss for the week. Next one is New Zealand Swiss franc, pretty much one-sided here, above the 5% threshold on the large and small speculators for 97 and 100, and then below the 5% threshold for the commercials. And this was a $463 gain. Same with the Swiss franc, South African rand, 0-100. This, however, is above the 50% threshold, crowded with the overall large speculators at 0-100. And looking at this was $895 gain. So you're looking with those three fades, $815 profit for the week, just with those three, based on the crosspair, regardless of crowding. So in looking at the overall picks for this week, Aussie dollar, Japanese yen, there was no real advantage. However, it did end up going down. Canadian dollar, Japanese yen as well, no real advantage in terms of the COD index to this overall short, and it didn't show anything in the previous week other than strength. Same with the Swiss franc, Japanese yen, it was very strong the previous week, and looking at this week, the only advantage here was the overall crosspair. Both of these were kind of weak, showing overall price action to the downside. This one was weaker until the dollar switched and went weak. And then the Swiss franc absolutely reversed, along with the South African rand in overall valuations and currency strength. Euro Canadian dollar, no advantage, so no fade. Euro US dollar, very strong on the quote currency, so I went ahead and went with this overall fade. Same with the Japanese yen, or the British pound Japanese yen. It's right up against the Z3 here. This is a good market turn to test this. British pound US dollar, I already mentioned, I went ahead and got out at the overall low. It was an advantage here on the quote currency. New Zealand Japanese yen, no real advantage, so no trade. US dollar, Japanese yen was up on the previous one, and the crowding did not match this. If the base currency is stronger, it's going to go up. So there was no advantage here based on positioning for the US dollar, Japanese yen. Same with South African rand, Japanese yen. This was weak. This is sort of weak. When they're all weak like this, there's really no direction. And to go with the US dollar, Mexican peso, as you can see here, a trifecta of strength, weakness, went all the way up and then got out. And like I mentioned before, US dollar, South African rand, all the strength here, all the weakness here, even with the COD index, strength all the way up to this consolidation zone boundary, and then bounced off. And this is where I got out. Euro Aussie dollar, no real positioning advantage. Euro Swiss franc, contrary. This showed strength here, weakness here, that means it goes up, and the overall position is to the long side. And what happened? It went down, so no fade. Same with the Euro British pound, no advantage. Euro Japanese yen, no advantage. Actually, this one showed to the upside, so it can't conflicted with itself. No advantage for Euro New Zealand, no advantage for the Euro South African rand. And what you saw here, even though it went down, the positioning is crowd short, but commercials are above their 6-month average, showing a hedge, and positioning was to the upside. While this was to the downside, or the quote, and it was above the 50 percentile, this showed up, so it was conflicting with its overall positioning to the long side, and it went down. So no overall advantage in this fade. So as I look at the individual currencies and the futures as far as the overall weekly reports and the COT index, and Delta, I'm not seeing any advantage at all to any of the currencies. We have a change here, went more short. Delta, they also went more short. Small speculators went above the 50 percentile. So you want to keep small and large speculators opposite of what the commercials are, at the extremes, in order to get a better advantage. Same with South African rand. Small speculators dropped below and are now aligned with commercials. No advantage. Same with the Swiss franc. They're still to the short side. However, positioning change is positive and lost the 5 percentile advantage here in the COD index. New Zealand, same thing. Mexican peso, no advantage. Japanese yen, no advantage. And small speculators aligned with commercials. This large delta, though, may signify potential up move next week, but we'll see. Euro, they're on the same alignment. We need to see confirmation of a reversal to the upside, and it's conflicting with its overall crowding. Canadian dollar, same thing, no advantage. And British pound, no advantage. And Aussie dollar, no advantage. So looking at crowding on the cross pairs, where we have strong selling positioning, Aussie dollar, Japanese yen, it does have a very large delta to the upside. Canadian dollar, Japanese yen, strong selling position, does have a significant delta to the upside. However, this could signify an overall down move for next week. Swiss franc, Japanese yen, delta to the upside, incredible strength. We had seen no switch on the COD index to the other side yet. No advantage. Euro USD, COD index is to the upside with small and large speculators to the same side. This could be a good reversal next week to the upside. However, it does have strong positioning to the sell side. British pound, Japanese yen, no advantage. We still have right up against the Z3 and a delta to the upside. British pound, US dollar, no advantage other than strong selling positioning on the cross pair. We needed confirmation. New Zealand, Japanese yen, no confirmation, and we got a delta to the upside. US dollar, Japanese yen, got a delta to the upside, strong selling position, no advantage. No advantage here with the South African rand. Small speculators are not above 50 percentile, and we have a delta to the upside. No advantage for British pound, Aussie dollar. No advantage for British pound, Swiss franc. No advantage for British pound, New Zealand dollar. We do have a slight advantage on the British pound, South African rand short. We do have the previous week to the downside, and the COD index, though not at extremes for large and small speculators, they are within crowding above the 50 percentile range. So this, be on the lookout for British pound, South African rand to the downside. US Mexican peso, no advantage on COT index. We do have a delta to the upside though. Aussie dollar, Canadian dollar, no advantage. Swiss franc, South African rand, contrary to its crowding, and the COD index, no real advantage. New Zealand Swiss franc to the downside. We do have the COD index within a tolerance of this, with large speculators at 97% and small speculators above the 50 percentile range. However, we're not at extremes with commercials. We do have a significant change in commercial positioning. However, the delta was to the upside, and it has weak sell positioning because the commercials are above their 6-month average. This could have more potential to the downside for next week. Let's take a look at it. US dollar, Swiss franc, no advantage. So that's the weekend review for the 28 majors and minors and 5 exotics. No real advantage on the individual currencies. They're all kind of consolidating at this point, so it could be any direction for next week. If you're interested in these kind of strategies going forward, or programming in PineScript or Python and auto trading, and being a part of a trading community for either trend trading or turn picking at Crowded Market Report, click on the links below. And remember, ruthless risk management. Have a great weekend, everybody, and I'll see you on Sunday. Well, if you like this video, hit the like rumble button below and the subscribe button. And if you want more information, click the course information links below. On the TradingView link and on TC2000, I have an affiliate link. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.